Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on key sectors and stocks that we should be focusing for the day and the next few trading sessions. From price action perspective, that is what happened in trade yesterday. Both the frontline indices, that is Nifty and Bank Nifty, opened gap up and then traded in an extremely narrow range for the entire trading sessions. Finally, Nifty ended the day closer towards levels of 19,800 zone, the highest levels post 18th October, while Bank Nifty for yet another session witnessed an underperformance as compared to Nifty. Coming to the macro factors, the dollar index continued to weaken below the levels of 103.5, and even the US 10-year bond yield is quoting 4.45. The longer US 30-year yields have also fallen to the levels of 4.5. This is the lowest point in over 8 weeks. These developments are positive for risk-on assets like equity markets for both the global and the Indian markets. Brent to crude oil recovery above $82 per barrel has sent the rupee towards the upper end of its consolidation range, which in turn could put pressure on equity markets overall. It's important to closely monitor crude oil prices as it has vast implications on our market. Coming to the global market update, the S&P 500 is in a strong uptrend, and the currently, if you see, the resistance is placed around 4,630 4,650 levels, where it may consolidate before proceeding towards fresh lifetime highs. Coming to the index levels, yesterday too the index faced selling pressure around the crucial resistance mark of 19,830 19,850. This zone of 19,850 19,000 is significant as it's the gap zone that Nifty created in the third week of September. Moreover, it has acted as a strong resistance twice in the month of October, which is why surpassing this zone is essential for the index. While on the downside for Nifty, that is, the key support is placed around 19,670 19,710 levels. Above the level of 19,900, index could continue its rebound rally up to the levels of 20,050 20,100. Coming to the OI data, significant call writing is witnessed in 19,800 and 19,900 strikes, while on the put front 19,700 and 19,800 witnessed considerable open interest additions. Overall, the range for the day could be 19,680 19,710 on the downside, while the resistance on the upside could be seen closer towards levels of 19,850 19,900. Coming to the update regarding Bank Nifty once again underperformed Nifty and the overall broader markets. The immediate support for Bank Nifty is seen in the range of 43,280 43,350, while the resistance is seen at 44,000 mark. Only if Bank Nifty moves above 44,050, it could witness short covering towards the levels of 44,250 44,300. For the weekly series, significant open interest build-up is witnessed in 43,500 43,600 puts, and on the call side it is seen in 43,700 and 43,800 calls, implying the near-term range for the index or at levels of 43,450, and on the upside it is seen at 44,050. Sectors and stocks that are currently in momentum, the pharma space continues to see strong momentum on the charts, with the likes of Sun Pharma, Cipla, Divi's, Dr. Reddy and Oro Pharma showing good traction. Resilience is seen in the real estate space, with strength seen in stocks such as Prestige, Brigade, Shobha, Oberoi Realty, Godrej Properties and DLF. The entire real estate space is at a 14-year breakout, and dips in these names should be looked upon for an accumulation opportunity. IT sector remains relatively strong, with the likes of Tech Mahindra, TCS, HCL Tech from the large cap doing well, while Persistent, Cyient, Mphasis, Newgen and LTTS from the mid cap space continuing to show excellent traction, which is even expected to continue in the next few weeks. From the broader market, bullish setup was observed in the likes of Titan, Kalyani Jewelers, KEI, Grasim, SJVN, Century Textile, Wellspun and Exide. Coming to the FI/DI data, in the cash segment, FI is sold to the tune of 450 crores while DI is bought to the tune of 720 crores. FI's long short ratio for index futures improved marginally to the tune of 21.47 as they squared off almost 6,000 index futures short contracts. On the stock futures front, FIs have bought to the tune of 32,400 contracts, while on the options front, FIs bought over 2 lakh call contracts and 78,800 contracts of put options. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.